This is the golden question. Hello, guys. Welcome to episode 8 of the Golden Question podcast. In today's episode, I want to ask the question, why is counterfeiting money illegal? And I'm posing this question because, as we've seen with the reaction of the Fed toward this crisis and toward this downturn of the economy that we've been experiencing these past 2 weeks, the Fed's solution, of course, is nonetheless to just print more money. And again, it's ironic how that this is their only solution. Whenever there's a time of crisis, print money. And again, I'm saying the term print money very loosely because it doesn't mean a lot of different things. However, at the end of the day, there's always more money into the system created from thin air without it being backed up by production. And again, I've gotten into several other podcasts discussing that, and I will expand on it in the future. So it's not like I talked about it once, I'm never going to talk about it again. There are going to be times where I continue to talk about it. So counterfeiting money, I mean, there's several people that have done it throughout history, some more notable than others. And what happens is an individual somehow finds ways to replicate how the dollar is formed, and it's a complex piece of paper that obviously has a bunch of different security features and technologies to help prevent people from counterfeiting money. But what I'm trying to argue is, if there's an individual who believes that he wants to acquire more wealth, and in order for him to acquire more wealth is to benefit the lives of others. Again, this is just, a sort of, he sort of has a Keynesian ideology in which he could just create demand for other people's products and goods that other people created, and he feels as if he himself doesn't have to create any of these goods. He could just create demand for other people's goods, and in theory he believes that he could actually help those other people. So what he does is, again, he believes that his actions are just. He decides to print money. He buys a printing machine, otherwise known as a printer. I don't know why I said printing machine, but a complex printing machine that can successfully replicate the looks and the feel of the dollar, the paper dollar. And let's say he creates it, and then he goes around buying stuff. So again, none of this, obviously the money that he printed isn't backed up by anything. He's just making it out of thin air, and he's going around. He goes to McDonald's, he buys some burgers, he prints another, let's say, several thousands of dollars, and then maybe goes and buys a car. So he's putting more money into the system. Now, what he's practicing essentially is the Keynesian ideology, in which the best way to improve an economy is to create demand. Because if there isn't demand, that's, in their eye, a negative thing, and the way to cure that lack of demand is to then artificially create demand. And by doing that, they're just printing money without it being backed by anything. So that's how you artificially create demand, because demand is fueled by not only supply, but again, essentially a form of supply, which is savings. So in order for people to demand things, they actually have to have savings first. Then they're able to demand things. But artificial demand doesn't have a base of savings. So it's just demand created out of thin air. And essentially the money in this case is a tool for demand, because you are creating demand by dictating where your money goes. the more money you are willing to give up, the higher demand, the higher aggregate demand there is. So you have this individual, and a Keynesian, if you really sat down with him and told him, "Can you please explain to me this scenario and why it is wrong and why the government is making this action illegal?" Right? He's doing the same exact thing that the government is doing. The government thinks the solution is to create demand. This individual is creating demand, and in fact, he's doing it in a more direct way. He's getting the money, and he's directly going to businesses and putting it in there, right? He's not doing it sort of indirectly by creating money and then sending it to the markets and then giving it to accredited, institutions and certain banks, and then doing it the long way, quote unquote. So he's actually doing it in a more efficient way, just directly pumping money into the system, going directly to the hands of business owners. So what's wrong with this? So if you were to ask, a Keynesian across from the table, can you please tell me what's wrong with this? I think he'll have trouble. And ultimately, the basis for him, arguing this action that this individual did is wrong is mostly based on the fact that the money is not being produced by an authoritative figure, because the money doesn't have a stamp of approval by the federal government. And that's essentially what it boils down to. But in terms of an economic argument, if you would call it that, there really is no difference between demand that's has a stamp of government approval and demand that doesn't, because demand is demand, right? If I have two cups that do the same function, they're both meant to drink water, except one has a stamp of approval by some agency, whatever. But at the end of the day, there's still two exact similar cups of water. There is no difference between them. It's just one, you're dictating this one to be used because there is an authoritative force. So essentially, it boils down to the authoritative force that the government gives, in this case, its own production of dollars, its own production of paper versus other productions of paper. And that's where I believe the Keynesian ideology falls apart, and it goes closely related to the broken window theory, or I believe that's what it's called, broken window theory, or the broken window fallacy. I think that's the correct term. And essentially what it says is, let's say somebody's window breaks. Is that a good thing for the economy, right? Does the individual go, yes, I can now, it's a great thing now that now that my window's broken, I can create demand. Now I can go help the economy. I can get my window fixed, and you know what? Might as well break a bunch of other windows. I can help fuel the economy that way. But again, the problem with that argument is, and the reason why they call it a fallacy is because, first of all the services that were used up by you. And again, it's not only the service, it's all the equipment that was used, all the men that were used to help fix your window could have been used somewhere else more productively, and could have been used somewhere else that had more, and I'm going to use the term legitimate demand. Again, demand that is fueled by savings and by someone's interest in acquiring something that isn't yet available now. Right? And I'm going to relate this back to, I forgot who it was. I forgot who made this analogy. I think it was Milton Friedman. But essentially, it was a story that starts off by someone going to, I believe it was the labor camps of China or the Soviet Union. Again, communist China or the Soviet Union. And he went up to I think it was like a mining industry, and he said he saw all these thousands of people working, using shovels, picking up dirt, and he went up to, I guess it was the manager, the owner, and said, "Why are you guys all, why are you allowing your men to use shovels? Don't you think they could be much more efficient in doing whatever you're doing?" And I think that it was a mining, they were doing something, mining something. But he essentially said, "Wouldn't you guys be more efficient if you were to use machinery? Why don't you use an excavator, use some actual construction equipment that could help you get the work done faster?" And his argument was, well, then these people wouldn't have jobs. So essentially, you could look at him from the perspective of the economy and the Fed, in which, and again, when I reference the Fed, I'm talking about any central bank. But essentially, again, it boils down to, I'm just giving money to as many people as I can, and that hopefully will spur up the economy. That'll somehow jog up individuals' income and help the economy. And in the case with the individual in the camp, he sees that if he cuts down on labor, he's actually giving less money to people, and the consequence of being efficient is that he won't be able to pay as many workers. And again, in his eye, he feels as if he is not benefiting the economy. But in fact, he has it all wrong, because first of all, his work could have been done. And again, if he were producing goods, let's say he was producing cell phones, he would be at a huge loss, and a loss to society, because now society has to wait longer for every iPhone to be produced. In the interim, the iPhones that are out there are going to be higher in price. So it's a cascading chain effect. Him trying to prolong the service is actually a downside to society. Now, as in relation to the workers, those workers could have been allocated to something else and doing something that's more efficient, and it could be used to be put in industries that are smaller, that still need more human capital and human resource to grow. And again, unfortunately, people think that we have the workforce, workers are in overabundance, and we just got to try to make sure that we employ as many of them as possible. But in the context of the economy, every aspect of the world is limited in resource, because there's a finite value, right? Yeah, humans can be born, but it's not something that's instant, right? You have to wait. There's a lot of different things. You have to wait 9 months before a new human is born, and then that human has to get to a certain age before he could start working. It's the same thing with the factory owner who wants to prolong his service, to prolong the service of the iPhone. Let's make it inefficient. Let me extend the process. But again, the consequence is now that iPhone is it takes longer to produce, and it takes longer to get into the hands of the people who are benefiting from it. So again, just as how the resources of the iPhone are scarce, just as how the resource of anything of the earth is scarce, human capital, the human body, is also scarce in quantity. So you have to be as efficient as possible when organizing your society. And again, I feel like it's blurred in the minds of people today, because they think that there's an overpopulation. We have a shortage of we have a surplus of workers, and so we need to get as many of them employed. However, it's the complete opposite. It's people, when you attribute them to certain resources in certain jobs and functions, you're sort of lowering the amount of workers you could allocate to something else, right? If I have 5 different, again, I'm going to make a lot of analogies, so hopefully you guys can keep up with me. And, in the future, I will, make certain video sets that will hopefully make this easier to listen and to watch for those who are watching. But back to my example, if I have, let's say, five different, you know, productions in my economy, right? I'm making computers, I'm making laptops, I'm making, uh, making light bulbs, apples, and oranges, and they all require workers. If I want to be, let's say, inefficient in creating laptops, let me just hire as many workers. I'm gonna unfortunately grab workers from other industries, and subsequently, there are new industries that can be formed that aren't being formed because of the lack of worker base there is, or there could be existing industries that are lacking workers. So again, it's not a matter of let me get as many workers as possible. It's a matter of it's instead a matter of, am I using the workers most efficiently, and are those workers better off out in the economy instead of being locked down in my production, which I don't need them, but I'm just hiring them because I feel like I'm doing something good. But again, due to the cascading domino effect, it's not, because it has lasting complications uh, in the economy. So again, I've deviated a lot from my main question, but let's get back to it and then let's close on it. When you're creating money, you're essentially creating artificial demand. And again, you're missing the point. Just as how if you think that hiring as many workers is the goal of the company, creating as much money as possible, again, is not the end game. You're missing the point of the whole point of having this organized economy. The whole point of having an organized economy is to produce goods and services, right? And that's why the government isn't making it illegal to produce goods and services, because that's the essential uh, point of a structured economy. But however, as if you can see, now the government has made printing money illegal, and it wants to be the authoritative figure on creating money. Because again, if you think about it, if an individual started to print money on his own, and and if you're knowledgeable of the fact that he's printing money, will you sell your goods or services to him? Right? If you know, like, let's say the individual who I gave an example as before, the one who printed the money in his backyard or in his basement, and went to McDonald's, and let's say you're the fryer, you're about to throw some frozen fries in the deep fryer. Will you do that service for him for free? Is essentially the question, because the thing that he's giving you is just a worthless piece of paper, and now you're in the risk, you're in the liability of now seeing if you can let other people trust this piece of paper has value. And you're at a loss if you then were to use that piece of dollar somewhere else, and then that person says, no, I don't want it. So when the dollar that the individual prints doesn't have any value, nobody's willing to accept it for cash. But all of a sudden, they accept the dollar that the government prints. But again, as I said before, it's essentially the same thing. It's just a piece of dollar that's being printed out of thin air in hopes of helping the economy. And when we look at the socialist ideology, the Marxist ideology, it then goes to the extent of banning production of goods and services. So not only am I not allowed to print dollars and create my own demand, I'm also not allowed to make my own goods and services for the betterment of society. If I feel like if I have a good or service, I can't create it. I have to be under the umbrella of the government. I have to be under the authority. I have to get permission from them to do this, and I have to give them all my benefits, all the people who are willing to trade their goods and services for my goods and services. I can't collect my reward, their goods and services that are being traded. Or I have to collect it, but then I just have to right away give it to the government. So as you can see, it's entirely unjust. It's flawed. It's not only unjust. It's not only it doesn't work on paper, but it's from the core flawed, and it's not going to result in the outcomes that people are expecting. And the solution again to this is to allow individuals to create their own currency if they feel they need to. And again, before we've had the Federal Reserve Act, and early in the 19th century and throughout the 19th century, banks issued their own currency. So banks issued currency that individuals could then use, but the bank again had gold or silver in reserves. So if at any moment, if an individual wants to come back and claim that gold and silver, they're able to do so. So essentially, the bank was just a holder of gold and silver, and it issued ownership receipts for that gold and silver that's stored in the bank. So again, if the individual wants to create his own individual bank, let's say, right, if the person who wants to print up currency, it's not that easy. He actually has to have savings, right? He has to have the savings. He has to have something stored, whether it be a bunch of computers. Let's say he hoarded, thousands and thousands of computers in his basement, and then is issuing currency. And on the currency, it says this is redeemable in terms of a computer at this address, let's say, from this individual. And then you could pass on that receipt. Now, you're going to trust him and say, okay, giving you this service or this good for that piece of paper, but that piece of paper isn't the end game. It's the actual computer that's that's being stored in his basement. And now I don't have to acquire that computer. I could now then trade this piece of paper for someone else's goods and services, who that person is also going to then entrust me into thinking that this piece of paper is correlated to the computers that's being stored in his basement. Now, again, I don't have to go to the computer. The person who I give the receipt to doesn't have to go get his computer. It could be several exchanges and transfers down the road before ultimately one individual might say, okay, you know what, I'm done trading this, let me go ahead and get this computer. And then they can go back to the person in the basement who has the computers and actually redeem that computer. So if that person didn't redeem the computer, that piece of receipt could keep transferring. But again, ultimately, the thing that matters is if at the end game somebody actually redeems it. Because if that person realizes that he isn't going to get his computer, or if he goes there and the bank says, we don't have your computer, it's sort of a false demand. All the demand that was created was, in a way, not true demand, right? It was false demand, and ultimately someone does lose in that transaction because that person, he's, I guess, in a way lied and didn't actually have the computers at hand. The person at the end who traded his service, he sort of traded it for free. He gave the service, but he didn't get anything in returns. So and now he's left out of luck. So again, I stress this in almost every podcast. The point of an economy, it's not just to create jobs. It's not just to create money, which is a tool. It's not just to get people to work. It's not just to make people believe something. It's about the creation of goods and services. That's the be-all, end-all, end game to the creation of goods and services. And any attempt to circumvent that and cheat your way into acquiring goods and services without actually creating your own goods and services will result in a complete collapse of the system that you were relying on to provide you with the goods and services. And again, we're seeing now with the coronavirus, there might be a shortage of food. I was reading this article. There might be a shortage of food, especially in the food banks. Now, all this money that the Fed printed, what good is that going to do if there's no food for you to buy? Right? And again, this also goes back to the point where the government can never create production, can never increase supply. you can always increase demand because our demand is unlimited, right? We all want an unlimited number of things. And we could keep demanding things even if there's nothing here. We can keep demanding it. So demand is essentially, at its core, unlimited. Supply, on the other hand, is what is limited. There's a limited number of supplies on the Earth. We just have this Earth, right? There's no other planets that we can grab resources from. Then there's not an infinite number of planets that we can grab resources from. We just have this own Earth and whatever's on this Earth. And if we use it up, then there is nothing left of it. So we better do the best we can at using the goods provided to us on this Earth at the most efficient way possible. And that's where the economic system stems from. So supply is what's limited, demand is unlimited. And it's easy to create something that's unlimited, right? If I have the unlimited capability of demanding things, the very act of demanding things should be easy, right? I can just keep demanding things and it can increase exponentially. And I can, I could sit days on end writing lists of things that I want. But what actually matters and what's actually the whole point of working is to create supply. And that's the thing that nobody could create supply indefinitely, because supply takes time to create. And at the end of the day, you have an unlimited supply of which you're using from, of which you're gathering your supplies from to create the finished good and service. So governments can never create supply, they only create demand. And it's sort of fooled the public into thinking that creating demand is all that matters and supply will somehow follow, which is the definition of Keynesian economics. If we create demand, somehow supply will follow. But at the core, supply is limited, demand is unlimited. You can never create supply just out of demand. There needs to be supply already there, created for the demand to feed off. And that's my little, economics 101 talk at the end that I do on almost every podcast. And I think it's important because I want to stress the points of supply and demand, which is just simple economics 101, and it's common sense. Like, the stuff that I'm saying it's not, I bet somebody's heard it at one point in their life, and it's something that makes sense. It doesn't require too much thought to understand the idea of supply and demand, but unfortunately government has sort of manipulated that and told us it's a complex thing and told us that it doesn't work according to common sense. And they've done it to justify their actions of creating wealth out of thin air and creating the illusion of wealth, creating money out of thin air, and letting those who actually create goods and services suffer. Thanks for listening, and hope you guys stay safe.